Welcome to Money Matters TV. My name is Paul Mitchell. I'm Chief Credit Officer for Upland Business Capital, LLC, and I'm your host. So I'm joined this evening with Doug Hepburn, who is CPA, PFS, CFP, MS Taxation of Doug Hepburn Advisors. Welcome, Doug, to the show. Good to see you again.
Thanks, Paul. Always good to see you too. Just a couple of compliance disclosures here. I'm actually an investment advisor representative with Cetera Advisors, offering securities and investment advisory services through them. They are a broker-dealer and registered investment advisor, a member of FINRA, SIPC. Cetera is separate from any other named entity.
Very good. Well, Doug, you're a very long in the tooth financial executive dealing with small and medium-sized businesses. You have lots of clients around the area and all. What are you hearing from them? What's the story, for example, all these jobs are going unfilled and, people have had problems with the pandemic and that type of thing. What's going on?
You're absolutely right. We hear anecdotal stories about companies that are trying to fill positions and just can't find qualified help. There's some concern that possibly the bonus unemployment was a cause of that, but of course that's going away now. So it remains to be seen whether or not those jobs are going to be filled. There's generally a certain number of jobs that are in transition at any point in time, but at this point, if I'm not mistaken, the numbers are about 7 million nationally. So it's a great job market for job seekers, but it just depends on what area of the market you're in. For example, go to a restaurant these days.
Oh, yeah.
And a lot of restaurants have cut back their hours because they just don't have the staff to be able to fill all the tables and serve them properly. But
I was at a restaurant, outdoor restaurant, last weekend, and normally it would be just filled with people both inside and outside. And outside, they said, "Well, if you want to get some food or drink, go inside and order it and bring it outside." Because we don't have the people to staff outside. And I'm going, you got to be kidding me.
Yeah. It has become an issue for a lot of restaurateurs, and part of that is the restaurant and service industries like that have, in particular retail, have seen people actually change careers and get out of the restaurant industry. Now, I would think that this must have been a great summer in vacation towns for high school and college age kids, because that's usually where most people get their first job experiences in restaurants. And a lot of them are actually increasing the pay that they're giving to their employees just to be able to fill those spots.
Do you think that the federal government's subsidy programs of sending checks for $1,400 a month or one times, and then the unemployment compensation thing has been going on for many months, is coming to an end? You think that's been also an impact on it?
Yes. Again, a lot of the evidence is anecdotal, but I've actually heard from people who are in that situation who've said, look, I'm getting paid to stay home and be unemployed. So there's no sense in looking that hard for a job. But of course, once that program runs out, then people are going to have to go out and get a job or reduce their lifestyle. So,
well, Doug, I think many of your clients are not restaurants or retail.
Correct. What
experience do they have in terms of their keeping their employees or getting new employees and that type of thing?
Well, it really depends from business to business. Certainly in any business that requires skilled labor, industrial businesses with machinists, getting those people is always a challenge. and getting people who are confident and are willing to stay for a long time and commit to that. That's always been a challenge. In more service-oriented industries, IT professionals, programmers, they're finding that there are opportunities to bring more people in, but it's still challenging. Not as challenging in some of the other more blue-collar areas.
Yep. I know somebody that retired recently that was looking for a part-time teller job, bank teller job, because it's less than 40 hours and a smaller commute and all that type of thing.
Right.
I'll call that semi-skilled. It's certainly not unskilled, but it's certainly not high-tech and that type of thing.
Right.
And they say 6 weeks later, after applying and having interviews, talking to a person, talking to a computer, and the whole bit, still no response. Unbelievable.
Yeah.
They need somebody.
Yeah. And, it's interesting. A lot of employers have gone the route of doing the virtual interviews, and there's a lot of technology out there that's assisted them to sort of cast the net wide and filter down to a number of people. So it's been an interesting job market, to say the least.
Well, Doug, we have a question from one of our viewers, and I think it's right up your alley, Mr. Taxation, with your background and all. And the question is from Nancy Kramer, Philadelphia. How has the COVID-19 pandemic affected tax planning? Ouch.
Yeah, well, that's a great question, Nancy. I wish I had a lot of great strategies to tell you about. Unfortunately, most of the tax provisions in that legislation were designed to provide relief to taxpayers and citizens who really needed the money and were down on their luck. So, for example, we saw for 2020, if you had a COVID-related issue, you could take up to $100,000 from your qualified plan, your 401k plan, and without penalties, and pay it back over 3 years. They increased the maximum loan amount you could take from a 401k from $50,000 or 50% of your account balance to $100,000. That's gone away. So you can't really, and you were also able to not take your required minimum distributions if you were over age 72. Those provisions have gone away. Some things that have stayed around, though, for example, you may remember that they made it possible to give $300 charitable contributions above the line, meaning right off the top of your adjusted gross income if you were somebody who didn't itemize your expenses. Well, and take itemized deductions. Well, now they've improved on that. So if you are single, you get $300. If you're married filing jointly, you can actually take $600 of charitable contributions above the line, as we call it, to reduce your adjusted gross income. Is it a huge winner? Probably not, but it's better than nothing. Certainly, if you have charitable organizations you care about, it's worth considering. So that's really the big one. The other big one is the Tax Cuts and Jobs Act created some changes with the deductibility of meals and entertainment. And we all knew for a long time that club dues were never deductible, at least not since the Tax Act of '86. But if meals and entertainment were tied together, they were no longer deductible. But meals were 50% deductible. There was a 50% disallowance on business meals for business owners.
Well, Doug,
they've increased that to 100% now. So
sounds pretty complicated. So
we're trying to help the restaurant industry. So
appreciate your advice, but man, our best recommendation would still be to see your professional tax advisor and make sure they really have the background in knowing all these details. Wow.
Absolutely.
Thanks, Doug. So if our other viewers would like to send a question to Money Matters TV, here's how to send your question.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says Send Us Your Questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Welcome back to the show. And now we come to the more exciting part of the show where we introduce and interview our featured guest. And this show, it is David Emery, CFP, CDFA, MBA of Planning Capital Management. And as you can guess, he plans capital. So welcome, Dave, to the show.
Well, thank you. Good to see you, Paul. How are you?
I'm terrific. It's a little bit cooler the last couple of days, so I'm enjoying life a little more.
Absolutely.
So Dave, we have some questions we'd like to ask you.
Great.
And find out more about you and all. And the first one is, tell me just a little bit about yourself. You recently joined Planning Capital. Tell me about you and the firm.
Yeah, so I recently joined Planning Capital. I guess a little bit about me. I'm a financial planner. Been in the business since well before 2000. Mm-hmm. Do comprehensive financial planning and help people with wealth management, managing their investment assets. Have a couple of niches I've helped over the years. One is retirement income planning, helping people approach retirement, coming into retirement or in retirement, and how to maintain their lifestyle and make sure they don't run out of money. That's always good. And also do one of the designations, CDFA, that's a divorce financial analyst. So I help people going through divorce. Yeah, I know it's sad, but it's
it's a fact of life.
Yep. So
it's a complicated fact of life.
Yeah. So, but yeah, I've been pleased. I joined Planning Capital around April of this year, mm-hmm. and they are a fee-only financial planning firm. We only get paid for giving our advice and managing investments. We don't sell products. We don't take commissions. It's been very good, very good culture. Very their values align with mine. So it's been a very good transition.
Excellent, Doug.
Yeah, so tell us a little bit about yourself. What areas do you generally focus on with clients? I mean, you're based up in the Lehigh Valley, right?
So actually, we have a number of offices. Our main office is in Center City, Philly. We do have an office up in Allentown. I'm in Doylestown. We have meeting room space here in Doylestown where we meet with clients. So I guess one of the big areas I help people with is, like I said, a lot of people come through the door is regarding retirement planning. People want to understand we help them understand where they are, where they want to go with regards to when they're going to retire. Once they retire, how to make sure they can maintain their lifestyle and not outlive their money. So that's one of the big areas. And I guess in general, that's kind of what I help people no matter what they're coming in for, whether it be divorce planning or college planning or retirement income planning. Same type of thing, understanding where they are, where they want to go, and how to get there.
Dave, you have a few niches, and some of them make me hungry, and some of them make me lose my appetite. Such as sandwich generation, which I get hungry for.
Yeah.
But then you have octogenarian, I start to lose my appetite.
Right.
And then gray divorce,
yeah.
That's like, the opposite of having an appetite. Tell me how you help them.
Yeah, so a couple of them. So the sandwich generation, what that means is it's a demographic that are basically between the ages of 45 to 65 that are approaching retirement age. They may have kids that are in college, about ready to go to college, come back from college, and they also have aging parents. And they're really trying to juggle all these. They'd like to retire, but they have so many financial pressures that it's often very cumbersome. So we definitely help them through that, and kind of leading into that, with the parents, the octogenarians, those that are in their 80s. I should say approaching 80. I mean, helping them transition to, the place where they raised their family for 40 years to the next where they want to continue to age. So sometimes it is in that same home, or sometimes it's transitioning to a continuous care retirement community.
Yeah.
And then there's a lot to consider in regard, not just the financial, but the emotional side of things too. So we help kind of all those two demographics. And then the gray divorces, I'll just talk briefly about that. So one of the fastest growing demographics of the divorcing population are people that are age 50 and above. A lot of times people have raised their kids and they've, they become empty nesters, and just unfortunately a lot of times these couples they divorce, and it's later in life, so you have less time to recover from financially from that. So that's one of the biggest demographics on the divorce side of things, is people over age 50 that are going through divorce. So we help them with that. So
on the octogenarian side, my middle son and his new wife just moved into the home of her father, who is an octogenarian. And there are going to be some challenges there and that type of thing, but God bless them for doing that thing.
Oh yeah.
Anyway.
Yep. Absolutely. Yeah. I mean, that's kind of like you said. That demographic is one last point. There's like kind of four things that are on their mind. One is they don't want to be a burden on their family.
Yeah.
They don't want to run out of money.
Yep.
They want their life to have meaning, and if they have faith, something, they want to go to heaven. So that's help them. That demographic, I heard that once at a seminar, and it really does resonate when you're talking to that demographic. That is what's on. They're not going to come out and say it, but that is definitely what's on their mind. Help them through it is important.
Amen.
That makes a lot of sense. So, I'm curious. You brought up the issue of gray divorce, and you're absolutely right. I mean, that's a burgeoning area of our the marketplace right now, because particularly in people in the post-retirement years, because they're used to working 8-10 hours a day and not seeing their spouse, and only seeing them for a couple hours a day. Then they're with them all the time,
right?
and so that ends up, I guess the old saying is familiarity breeds contempt. But when you do your divorce financial analysis, are you representing one client, both clients?
Yeah.
How do you manage it? Because I know that can raise conflicts of interest.
Yeah. That's a great question, Doug. And it's really the short answer is it depends. There's basically kind of three different ways to get divorced. One is kind of called traditional, where each spouse gets a lawyer, and the lawyers,
and the lawyers make all the money.
Too much, more than they deserve.
Each of them, do the best job they can for the clients, put it that way. So in that case, I'm usually representing one or the other. There's another model called collaborative divorce, where it's very much a team approach, where both parties get attorneys, and they sign an agreement that basically says that the divorce will be handled outside of going to court in an amenable way. They also, within that model, hire a financial neutral person, which would be like myself, to sort out what's fair and equitable regarding the divorce. And they also may have a family therapist too. So it's really good team approach. So it kind of really depends. I mean, I've done it, this, as long as you clarify and set the expectations up front, I think it's fine. But to your point, Doug, it can become kind of sticky.
Yeah, I can appreciate that.
Dave, what are on existing clients and new prospective clients' minds now?
Yeah, that's another good point. One of the big areas, I guess, just recently has to do with both inflation and taxes. Seeing what rumblings in Washington D.C. They're seeing that the inflation has gone up. It costs more for gasoline and food, and with potential all the spending that's happened with these stimulus packages. Speculation is that somewhere they got to pay for it up the road, right? So taxes. So those are the kind of the two things that are definitely on people's minds that I see.
Yeah, that makes a lot of sense. I mean, I've heard a lot of the same things. People concerned about, helicopters dropping money everywhere, and when is it going to run out, and what are people going to do with that money? And there's always both sides to the coin. I mean, you hear some strategists say that it's only transitory, and inflation is not going to be around. You're going to hit hyperinflation levels like we saw back in the late 70s, early 80s. And then there are others who are saying, we're going to hell in a handbasket, sell everything and buy gold, which I would never recommend anybody do. But
No.
Unfortunately, it creates an opportunity for hucksters out there to try and sell their wares and get people to make what are usually unwise decisions with their money. Would you agree with that?
Oh yeah, absolutely. I mean, I guess your point about hucksters. I mean, yes. I mean, I think it's, there's a couple points that definitely going through my mind. We got too much. We don't have enough time to talk about here today. But yes, and to the inflation point too, though. Yes, inflation is definitely higher now than it was 12 months ago. I guess one of the things that some of our clients, and maybe myself included, it's high. It's higher than it was, but we've really been in a very, very low inflation environment for so long.
An interest rate environment. I mean,
exactly
0.06% on your savings account, for God's sakes.
Exactly. And so with a little bit of inflation, I mean, if you roll back the clocks to like 06 or 2006, I mean, are we about where we were back then? I mean, we might have been. I haven't checked it, but I guess my point is that we've been in such a low interest rate environment and low inflation environment that to have any now feels like a lot.
Yep.
It brings back that old song. I think I'm turning Japanese. The Japanese economy has been in slow growth mode for a number of years with low interest rates.
Right.
And the question is, when are they going to be able to inflate themselves out of recession? It's the pandemic has really had a major impact on a number of different industries. We talked about the restaurant industry earlier.
Yeah.
How have you seen the impact on the financial planning and wealth management industries?
Yeah, that's a good point. I mean, a couple of things I've seen is that, believe it or not, it seems like, people, they have more money because they haven't been doing anything. They really haven't gotten that, gone out and gone on vacation. So
vacations.
The savings, from what I've seen, some of my clients, they have more savings. Like I said, their costs were down until recently when
well, that's a good thing, right?
Exactly. Well,
especially since they're trying to retire.
Exactly. Yeah. So definitely seen that, but also the pandemic, how our businesses has changed. The whole doing like we are right now, doing Zoom or across. To communicate, whereas and that's kind of gained some efficiencies, at least with our firm, and that for it just is more efficient. You don't have the travel time and things like that. So,
but in the same vein, do you see the that lack of human interaction and that face-to-face contact, the nonverbal communication being an impediment to
absolutely.
Sometimes being an impediment to doing business.
Yeah, no, absolutely. I do miss the whole, in-person side of things. And I want to get back to that, but I mean, it does help with regards to, when you have clients that are across the country, it definitely has helped with regards to those clients, the ones that are local. You're absolutely right. I want to get back to more face-to-face, and like you said, you do miss a degree of not having a face-to-face conversation with a client.
Absolutely.
Dave, if someone is looking for a financial planner, wealth manager, what should they look for as they're doing their research?
I think one of the big things is the marketplace is quite confusing on financial planning. I mean, you have people that, they're selling insurance or financial planners. You have people are just managing money. I think it's important to have an understanding of how they get paid. That's one thing, an understanding of that, and that can be kind of cumbersome because it's confusing. There's just so many different business models out there. I think it's also important to have an understanding of is that firm's values in alignment with your values? I mean, and that's kind of something that takes a little bit of time to flush out. Those are a couple thoughts, and then the last thing that was kind of important that I heard once and really resonated with me is I try to follow this is has the planner walked in the shoes that you're walking in now? Like like I mentioned, I do divorce. Have I ever been divorced? No. So I'm really not the poster child on just what I just said. But have I walked in those shoes with octogenarians and people planning for retiring and things like this? Yes. So I mean, I think it's important.
You're 80?
No, I'm not quite.
Man, you've aged very well.
You look good, yeah.
Yeah, thanks. So, but I think those are a couple things. So.
Well, I would also recommend, as I always recommend about almost anything that we talk about with our viewers and stuff, talk to a few.
Exactly.
Talk to a few financial planners, talk to a few lawyers, talk to a few accountants, talk to a few professionals, whatever field that needs to be addressed. So just don't take the first one, and that's it, and form your own opinion there, et cetera, et cetera.
Yeah.
Dave, my favorite question at the very end of this these interviews is, if a young person wanted to get in your business, what would your recommendations be?
Wow, that's a great question. I guess the one thing that would be is to seek out a way to get some good mentorship from a successful planner that's been in the business. That's one of the big things. And join organizations that are part of the financial planning. I mean, there's one called the Financial Planning Association. They have a number of chapters across the country. They have a big one here in Philadelphia.
Yep.
Network that way, and I think that those are two big areas. And some people do get their starts at big companies like Vanguard, and work there for a couple of years, and they have wonderful resources. Big companies like that. So.
Well, looking at you and Doug, I also see get some letters after your name.
That's right. Exactly. Yeah, that's right.
That sounds good. Well, that kind of wraps up our show. So we appreciate your being with us, Dave. Any closing words or?
I don't think so. I just said I really enjoyed the time, and looking forward to working with you guys again.
Okay, thank you very much, Dave. Good luck and stay safe, as they say.
All right.
So, as we wrap up the show, I want to announce who our next guest is going to be, and that is Christina Markowitz, who is with Black Bull Capital Partners. So, another capital person. So, we like money, we like finance, we like capital. So I just want to remind everybody that watches this show that on this show, your money matters.